morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Tuesday, August 16th. We got a lot of economic data to go over today, so we'll jump right into it. We'll start off with the Consumer Price Index, which is for the month of July. And this is also known as the CPI. It's one of the inflationary numbers we look at for the consumer level. Now, back in June, we had a 0.2% increase. Forecast was supposed to be 0. For the month of July, and it came in at 0, so still showing very tame numbers here. Now, when you strip out the food and energy, this is kind of what the Fed really looks at, primarily because the volatility of those could not, the big swings that those could provide. So we had a 0.2% increase in the month of June. Forecast was supposed to be 0.2% for July, and it came up 0.1%. So again, still overall low numbers here. Now, on this year-over-year gauge index, it shows about 2.2%. Fed wants it at 2%, but the favorite gauge that they look at is the PCE, Personal Consumption Expenditure, which is still showing at 1.6 year over year, still relatively low. It just shows a better trend of the actual trends that we look for in terms of actual data for inflation numbers, which is the reason why they like the PCE a little bit more, carries a little bit more weight than the CPI here. However, we do got some housing news, and we'll start off with the housing starts for the month of July. So back in June, we had 1.186 million housing starts, and the forecast was supposed to dip a little bit down to 1.18 million, and it actually went up to 1.211. So this that was a nice little surprise there that we see construction coming in there. Now, a lot of this housing starts actually is multifamily, so it looks like some rentals rentals will be popping up here soon. So it's not all single-family homes or condos, these type of things. A lot of these are multi-family homes that create the uptick here. We also got building permits, so this kind of gives us a future gauge as to where things are at. And it kind of, as you can see, it dipped a little bit. So June at 1.153 million, forecast came to 1.52. So again, this kind of gives us usually about this time of year, we usually will dip a little bit anyways for the year, primarily because obviously we're going into fall and winter when they do construction. Industrial production, we had a 0.4% increase for the month of June. Forecast was supposed to be the same level at 0.4%, and it took off even further it jumped up even a little bit further at 0.7% here. And then we had a better reading for capacity utilization for July as well. So as you can see, we had 75.4 back in June. Forecast was supposed to be 75.6, and it jumped up to 75.9%. So overall, very good numbers here when you look at it. Basically, it tells us that inflation's very tame. Housing still carrying the economy. That we're creating more jobs and kind of keeping the GDP up, so to speak. And then, of course, manufacturing and industrial, we had a nice little uptick in there as well. Stock market's down today. A lot of it is, we had some new highs yesterday, but there was comments made by the New York Fed, Dudley, today. Kind of was a hawkish comment saying that you can't leave the, basically they're saying that rates shouldn't be taken off the table for September's meeting. So, that's kind of exacerbating. And then to top it all off, the yen strengthened against the dollar. They broke the 100 yen per dollar mark and got a little bit stronger against the dollar. So let's take a look here at the bond market. And we had, it seemed like a lot of people were pulling money out of the market yesterday. So this is yesterday. We dropped quite a bit. We dropped probably about 25 points, I think it was, if I remember correctly. As you can see, we did, here's the 50-day moving average. We did touch off it. We did pull back on it. Today we did start a bit higher above the 25-day or 10-day moving average, and we've dropped to, and we've even touched the 50-day moving average, even going a little bit further below it, and then we pulled back a little bit. Right now we're currently about 9 basis points from where we left off here, so it's from this gauge down to about here, even though we started the day much higher. So again, pricing has worsened a little bit from where we were yesterday in terms of even though it's 9 basis points, but a lot of people did the price difference, price change earlier in the day versus at the end of the day. So when you compare it to when they did the price change, it worsened again today. All right, folks, so we need to really try to get this pushed up, hopefully get these levels above the 10 and 15 10-day and 25-day moving average, trying to close above those. Right now, the 50-day moving average is giving support. If we break below that, the 100-day moving average will be down here a little bit further, which will be the next level of support. Obviously, we don't want to break below that as rates will go up. So if you're looking near term, I would definitely look into lock, as this could be a little bit of a bumpy ride for those who are floating interest rates. Those who are out longer term, go ahead and float a little bit, as we'll probably bounce back up a little bit. We'll probably see some of these rates again soon, but just not in the near term. You may see a little bit more of a bumpy ride before we get better. All right, have a wonderful day. Thanks so much for watching. I'll see you guys tomorrow. And tomorrow we'll have the notes from the Fed's meeting in in July. So that would be obviously the big news for tomorrow. And then we got the weekly jobless claims and some other data on Thursday and Friday. It will be actually a quiet day. There's no data to be represented. All right, have a great day. And again, thanks for watching. See you tomorrow. Bye.